Hello, I'm Bernard Hickey from interest.co.nz and welcome to a special economic weather report brought to you in association with Bank of New Zealand. Today we look at GDP figures for the September quarter, which came out and showed a contraction of 0.2%. That compares with economists' expectations of an increase of about 0.2%, so this was surprisingly weak. In fact, the Reserve Bank had itself forecast an increase of 0.3% for the September quarter. So what's going on here? Are we just about to head into a double-dip recession? Remember, when you look at what's happening here with our GDP growth rate, we had that long period of almost continual growth through the 2000s. Then we went into recession, late 2007, early 2008, and we're there for almost 2 years. Things started to pick up again at the beginning of 2009, and then we saw in the June quarter a bit of a drop down. In fact, that's been revised further down to just a 0.1% rise in GDP in the June quarter. And then we've gone here into negative growth, a contraction in the September quarter. Now, it would be officially a recession if we had 2 consecutive quarters of negative growth. So that second quarter would be the December quarter, the one we're in now. Now let's look at what's happening within those figures. Why did we contract in the September quarter? Well, when you look at housing, very weak, so construction activity weak, and also services around the housing market, real estate and banking were relatively weak as well. We also saw a decline in manufacturing output. Now this is in part because agricultural output was weak. Remember, during the September quarter we had those storms. Also, there was the earthquake in Christchurch, which according to most analysts reduced GDP by about 0.1% or 0.2% in that September quarter. Remember, there was only 3 or 4 weeks in that quarter. So, are we back in recession now? Are we going to have those 2 negative quarters of consecutive contractions? When you look at some of the factors, it suggests we may not be about to go into a double-dip recession. We've got the reconstruction work going on in Christchurch. There is some business investment starting to flow through, and there are even some signs of life in the housing market, or at least the upper ends of it. And remember, we've got export prices at near record highs, and the World Cup's on its way. But against that, we have a relatively weak consumer sector. People are being very cautious about spending, and we're seeing that in some of the Christmas sales. We have some numbers from Paymark this week showing that in the last weekend before Christmas, the last weekend for purchasing Christmas presents, sales were actually down 0.8% from the same weekend a year ago. So it's clear the economy is really struggling to get going again, and we may already be back in a double-dip recession. Certainly, economists are saying that the Reserve Bank now is likely to keep the official cash rate on hold until June at the earliest. So for those people on floating rate mortgages, they're currently around about 6.2%, they're likely to stay there at least until the middle of next year. And those people who are on fixed rate mortgages or want to stay with a fixed rate, this may contribute to a slight reduction in those fixed rates. We'll see what the bank reaction is and what the reaction on wholesale markets was. Certainly the New Zealand dollar blipped down after this result, which was weaker than expected, and it's already quite weak against the Australian dollar at around about 10-year lows. So there we have it, an economic weather report brought to you in association with Bank of New Zealand.